Thank you all for joining us for the Budgeting Income and Expenses Workshop. Joining us today is Samer Johari, CFA Vice President at JP Morgan Private Bank. He's going to share strategies for creating and maintaining a budget to help you accomplish both your short and long-term financial goals. So I'm going to go ahead and hand it over to him to get us started.
Thank you, Nevena. It's really a pleasure of mine to be here today. I graduated from UNLV in 2013, and it's really good to be back. We're engaged with UNLV students and faculty as well. And then also I envy you on this beautiful building. When I was coming to school, we didn't have it here, and then we had to struggle to find parking. So today's parking was really easy. Yeah, I'm really happy to be joined by you today. Thank you for taking the time. So just to give you a background about myself, I've been in the wealth management business for over 10 years now, doing private wealth management. So we work with the wealthiest individuals around the globe, not just in the US. As a matter of fact, JP Morgan has more than 70% of the world's billionaires where we manage their money and assets. And then so we work with all types of individuals, right? Whether they're, just starting from, being kids all the way to graduation. And then when they start having their own businesses, and then beyond that, we work with their families. We work with them on investing, banking, lending, and estate planning, or whatever the subject could be that can really help them with their financials. When I think about finance, it's really broad, right? There are so many different aspects of finance, and going to school, you learn the basics, but there is no school that can teach you really enough about everything that has to do with financing. So I would love to keep this conversation today as interactive as possible. I would really love to share any insights that I can help you with. I'm here to help and to share information that I know. So please ask me any questions as they might arise. Today's subject is going to be about budgeting, income, and expenses. And that relates to the book that Senator Elizabeth Warren and her daughter had written. When I was looking at the topic, one thing that also I thought about is actually investing, that it didn't cover investing and the subject. And maybe because I come from an investments world, that's what I was like, man, where's investments, right? We need to have that there, but I'm going to be covering that as well. I will start, the topic start by budgeting, income, and expenses. I would like to start talking about income. And as of I think income is the most important aspect of financing, right? Especially for individuals or even for businesses. That's, when you have a business and you start generating revenue and then you start generating net income, that's when the business starts growing and then you're doing something right. As an individual in your shoes today, right? Most of you here are students, maybe graduating soon and about to start a career or start your own business. It's really also important to focus on your personal financials. A lot of times we see business owners focused on their businesses, right? But they don't know how to spend their own assets properly, or not even just spend it, but also how to structure it properly, right? From an estate planning standpoint, or even from a taxation standpoint, because there are different ways where we can help our clients do that. So planning is really, really important. So when we start thinking about income, you're gonna graduate and maybe you already have a job today generating some level of income. You want to start thinking, how can I, as an individual, maximize this income, right? And let me pose this question to you today. Do you have any other income other than the job that you currently have today? Okay, let me ask this question. Do you know of any other ways that you can generate income besides the income that you're generating from your job today? Right. So we heard here there's real estate investment, and that's correct, right? So there are different kind of investment vehicles that can help you actually add to the income that you have. And actually, when I think about our clients, because we have minimums for our clients. So the minimum for our client to be in the private bank is $5 million. So all the individuals that we actually work with tend to be on the wealthy spectrum side. And I can't think of any one client that only has one or two sources of income. There are multiple sources of income. And that's one thing that I would highly encourage anyone, right? Even at a, hey, even at a, graduate level school, undergrad, to start thinking, like, we're not expecting that you have like 5 different sources of income, but start thinking of ways of how can you create additional income. So real estate investments are really great ones because they can create that income flow for you, but also you can invest in bonds. Sometimes, now the interest rates environment is really low, so investing in bonds doesn't really help that much. But also you can invest in stocks. You have some stocks that have 5-6% dividend, right? So even if you're sitting on cash, and then we have inflation. Inflation is starting to pick up. Then you're gonna start losing value of the money that you're sitting in savings or checking account because you're not earning anything on it. So you want to start thinking, okay, like I'm sitting on cash. I've done a great job saving. How can I have my money work for me? Again, when you start thinking about investments, don't go start buying anything with the 5-6% dividend now, because some investments are really risky. So, I'm sure you're all here very intelligent. Do your due diligence. See the companies that you're buying. Are they really good companies? Are you buying product for them? Do you think they're essential? That they're going to be around for the next 20, 30 years? Are they growing? Do they have the right management? So these are the things that you want to think about from an income standpoint. Any questions or?
On income, right? During the pandemic, for example, a lot of people are lending their cars out to ride share, that Turo app, right? So there are a lot of different things to generate additional.
Exactly. I mean, like I have a niece, and then during the pandemic, that she was like I can't find a job. It's really hard to work. It was like, why don't you buy stuff on Alibaba and then just repost it on Amazon and then charge that premium, right? And then if you start doing that on a massive scale, then you can make really good money, right? And this is something you're doing on the side besides being a student or whatever the case might be for you individually. So, and income, I think it's also really important to say that you have to learn how to negotiate for your income, right? Because when you graduate, you are in very high need, especially today. We're looking for people, and it's not easy to find people who are qualified. And once we find someone who is qualified, really money is not going to be the issue for larger institutions when we find the right people. So always think about your income. How can you maximize your income in different ways, whether it's your primary job or it's, something you're doing on the side. And then, I can ask you here, do you want to talk about budgeting first or expenses? Or it doesn't matter? Expenses. All right. So we have someone with a lot of expenses here in the room. We have some urgent work to do. No, so I think as I mentioned earlier, income is really important, right? And then you think of expenses. Expenses could be bad, could be good. When you have decent income, then you have the flexibility to spend more and be more, comfortable with what you're doing and then what you're spending on. When I think about expenses, what I would really pay attention to is monitoring your expenses and then having trends. Monitor your expenses. Gives you really good track on what you're spending money on, and if it's something you need, or is it something you want. And this kind of goes back to Elizabeth Warren book, right? The 50-20-30 rule, that 50% is like your needs, 30% is your wants, 20% is savings. So you can assess your income and see how much money you're making, and then see what would you be comfortable with expenses, right? And then how do you get to that? You think about the 20% savings, or maybe it could be 25 or 30% that you want to save, depending on what your personal goal is. So if you have that goal and say, okay, I need to put this money aside, and then I still have a budget on expenses, then that's great. Know that every month you have this budget to expense it, and then you don't have to feel bad about spending money, right? Because every time we spend money, we kind of feel bad about spending money, but we shouldn't, right? Because we're working so hard, we went to school, we got educated, like we've earned it, right? We have the right to spend. And then, but just sometimes we spend and we feel bad about spending. Am I spending too much or am I spending too little? I never think I'm spending too little. I always think I'm spending too much. That's just my personality, but, and drives my wife crazy, but anyway. Yeah, so set a budget, right? So like, think about your expenses. How much do I really want to save first? And then whatever I don't want to save, this could be your expenses. and then you don't have to feel bad about spending it. One important thing I would like to highlight here is with expenses, we're really moving to a subscription model all over the businesses, right? Like everyone now doesn't want to charge you a one-time fee, like even Microsoft Office, right? Like you used to buy it and just use Microsoft Office and you have it forever. Now they want to charge you an annual fee. Like that drives me crazy, right? But it's actually good for the economy because these corporates are making good money. If you buy that Microsoft stock now and you're making 4% dividend yield, you know, it's a good company, right? They have the right model in place. So when you start looking at your expenses, start monitoring, okay, what am I getting charged on monthly basis? And am I really using it or not? If I'm using it and I'm seeing the utility coming out of it, great, keep it, right? If you're spending it on Netflix, you're watching Netflix enough, great, keep it because it's something you've earned, you've worked hard for it, and you can do that, right? And then if it's not interfering with your overall financial plan. And then I talk about budgeting, and the kind of budgeting is really important. Why? Because budgeting is kind of like the monitor for everything. Are you overspending? Is your income being enough? And it gives you these trends. And then today, the environment that we're in, like data is really important. And a lot of people are hesitant to give all their information, what they're doing, like how much they want to save, what they want to spend money on. But to be honest with you, all this data is being monitored by the credit card companies anyway, right? So just go ahead, do what's right for you. Do what's right for you. And I'm not here trying to get more data from you. We have enough of it. So a couple tools that I really like. One is made by Intuit, you know, and then it's called Mint. It's really fantastic, right? You can make goals for yourself or how much you want to save. And then it kind of tracks everything, all your checking accounts, all your credit cards, and see what you're spending on. And then you can make a budget of how much you want to spend, like on movies or dining out or whatever the case that you might be interested in, right? Or like buying things that for your hobbies. And then once you exceed that budget, then it turns from green, you know, and then when you start getting close, it's yellow, and then once you surpass it, it's in red. And that's fine, right? Like you're not gonna go beat yourself up. Oh man, I like spent too much money this month. But like if you start seeing this every month that you're overspending on certain category in your financials, then look, we might need to talk. So, or you just talk amongst yourself and say, like, really, do I need that? Or maybe do I need to increase the budget for this category and then lower the budget in another category so I can spend on this, right? That's the way I would look at it. So that's kind of like overall, you know, thinking about income, expenses, and budgeting. Income is number one to me. Like I really like income is the key, right? That gives you the flexibility to spend more and then be more comfortable and not feel as bad when you do spend the money. Budgeting is really important because it's like it's keeping monitor of everything you're doing, right? Like all your hard work that you've invested in yourselves in, right? Whether it's education and so forth. That's important. So I'm gonna pause for any questions before I move on to the next topic. Yes.
Expenses. So talking tool, right? Especially when it comes to monitoring expenses, perhaps if you spend tips on like how to make that.
Right.
Right to that.
Yeah. So the question, I don't know, can they hear can the room hear the questions from? Yeah, sure. So the question here is about like some people have habits of spending cash and then which is harder to keep track of, or you know, how do you manage that? So with cash, I think the cash environment is starting to, I would say maybe in the next 10 to 15 years, we're not going to see cash as much as we see it today. And then we're starting to see less and less cash actually versus what we saw 15, 20 years ago. But if you really want to use cash, right, what I would do, it's all about self-discipline, right? So you get an income, or even if you're getting paid in cash, let's say, then say, okay, this is the cash that I'm going to spend this month. You're going to put that aside. And then you promise yourself that, look, this is all I can spend this month, right? And then you don't have to feel bad spending this budget that you've allocated to yourself. Now, if there's an emergency, and you should always have an emergency fund, then you know that you can go into tap into the emergency fund. But cash is really hard to for you to kind of monitor and it's actually hard for the government to monitor, and that's why everything cash transactions are being monitored, right? Like because the government also has a hard time to monitor cash. But if I was using cash myself, I would set aside some cash and I would commit to myself that this is all the cash I can spend this week or this month or whatever time frame you set to yourself, right? And then maybe if you spend it too early in the month, then say, look, I have to wait until next month when I get the next tranche of cash. So that's how I would do it if I was you. Does that answer your question? Yeah. So another thing that I think is really important is financing things, right? Because then you think about income, you think about expenses. When you think about expenses, how can we lower our expenses, right? Especially for the things that we don't like to pay for. And then that's when interest rate comes important, and then debt. And we are in an environment that, again, I talked about interest rates briefly earlier. We're in a really attractive environment for borrowers because interest rates are very, very low. And when I was reading the topics in the book that Elizabeth Warren had written, she kind of, talks against debt. And then here I kind of have to think about it to myself. Is like, is that really a bad thing to have, or is it not a bad thing to have? And what do you guys think? Yep. Yep.
David Ramsey, he says, all debt is bad, no debt.
Yep. Correct. Yeah. So, the consensus that I'm hearing from the room here that it depends, right? And then everything in finance and economics really depends. Like, that's why I love my job, because I don't have to answer any questions. Just say it depends. No, but it really does depend, right? So the environment that we're in today, right? If you can get a mortgage on a home for 30 years and just pay 3% annual interest rate, why do you want to go pay for this home today in cash, right? Like, get all the cash or the savings that you have and put it down to save that 3% interest rate, while you can actually invest that money and return, let's say 7 or 8% on it in the market in a balanced portfolio. This is not a very risky portfolio. So that's what we call arbitrage in finance and economics, right? So you have an arbitrage. So you're paying 3, but you're earning 8. So you're netting 5% on your money. So that is not necessarily a bad thing, especially when you have low interest rate environment. But I say this with caution because you have to be really self-disciplined in order to take that debt, right? Because when you do invest the proceeds, then you can get emotional. Behavioral finance can start kicking in when you're investing in the market, right? Because if you see the market going down by 20 or 30%, then you get nervous and say, okay, I'm going to cash out here. And then you end up in the negative. And now what? You have a negative net, right? So you negative trade because you're borrowing at 3 and then you lost 5 or 10 or 20% in the market. Now your cost of borrowing is really, really high. And this is not something we want to see, right? So if you want to do that game, if you want to do the arbitrage game, then you have to be a disciplined investor. You have to build the portfolio that you're comfortable with, and you have to stick with it in the good times and in the bad times. Because timing the market is really impossible doing. This is something, we've seen several times from our clients or even investors trying to do, and it does not work. So these are I think the really big topics, right? Like, maximize your income, lower your expenses, especially for things that you don't like to pay for, right? Such as student loans. Refinancing things, especially when interest rates have been going lower and lower for over the past 5 years. Think about long-term debt that you guys have, and think of opportunities if you can refinance this debt, right? And then if you can't, think to yourself, why can I not? Is it credit-related issues? Then how do I fix my credit, right? Because that's really important. Fix your credit, and that's how you can lower the interest rate that you are actually, as a borrower, that you can get to yourselves, right? And it's not that hard. Just make sure you pay on time. And then what I would do today with I still, I have it all set up from my checking account, automatic payments to your credit card where you don't miss a payment. Try to automate everything because it's really easy, right? Take advantage of all the systems that they're built in there. That's what I would do. And these are really the big ones I think about here, just like to get you on the right footing as, just starting your careers, graduating from grad school, and then you might be also have been in your career for a while and going to grad school. Any questions that anyone has that relates to what I do or anything?
comes from perspective of
Yep.
because sometimes you cut and then you see opportunities that side job. But here you are a graduate assistant and I-20, which allows you to work
Right.
and then you ask yourself, can you do those things?
Sure. So the question in the room here, what's your name again? Gostin? Godson? So Godson is an international student. And then he's asking that as an international student on an I-20, an F1 visa, I-20 status, how can he or she maximize their income in the US? Godson, I can relate because I moved here when I was 19 years old. I was an international student myself, and I feel your pain. Honestly, it's one of the toughest situations that I've been in my life because you're limited to how much you can work. And then when you're working, you're only getting usually paid the minimum wage, which is, it's not going to put you on a very good track. And besides that, as an international student, you would have to pay international tuition, which is not cheap either. It's probably like 5 times or 4 times more than what residents have to pay. So my answer to you is be patient, right? And don't think like it's all about investing, right? Like when you're thinking about income is a second derivative of investing, right? And now you're not investing money, but what you're doing today is you are investing in yourself, right? So keep that. And then how do you invest in yourself the most? Just become an outstanding student, stand out, amongst your peers. And then once you do that, right, if you want to stay in the US, then you can, because then you can get sponsored by a company where you can work here and then you can start maximizing your income over the years. Or you can go back to your home country, right, because you have invested in yourself. And now you have, you stand out amongst your peers in your home country, then you can maximize your income there. Maximizing your income, don't just think about it, like it's my job today, because that's like me. You might be in a job today, like working at Starbucks. This is, how can you maximize your income working at Starbucks? That's not the way you want to think about it. The way you want to think about it is like, how can I maximize my income switching careers and going to something that makes more money, right? And it doesn't have to be in a year or 2 or 6 months or whatever the case might be. It's just start thinking long term. Look, okay, so I'm investing in myself today. What am I going to do once I graduate? Which sector of the economy I want to be working in, right? And then if money is important to you, right? Say, okay, what is paying a lot? What sectors pay a lot of money today after I graduate? And then depending what you're graduating in, right? So there's a lot of variables, but if money is important to you, then you can start like doing your research, say, okay, these industries pay well, these industries don't. Where do I want to put myself? That's one way to look at it. Other way to look at it is like, what do I really enjoy the most? And then some people, like if you're passionate about something that you really, really like, then you can go do that and not think about the money. But if you're really excellent at it, the money will come through that because you're really good at what you do. And then that's how you're going to stand out. Does that answer your question?
Extra hours, side jobs.
So, Val, do you know if this applies to international students with extra 10 hours?
Special romantic.
That's what we option, but up to 10 hours. Yeah, up to 10 hours. Have to get it approved.
No, that's good. You see, so even this conversation started to make you think, okay, how even 10 hours, right? That counts. Like you want to start thinking, how can you maximize it?
So for those of you that Godson asked, as a GA, when you're on a contract to work 20 hours, is it possible to work? If you are a GA, you can. You just have to apply to work an extra 10 hours. by your current supervisor. I do see we have a question in the chat, and someone asked, how do you know who is a good company to start a portfolio with?
To start a portfolio with? Well, I'll tell you now, it's JP Morgan Chase. So, look, the company really doesn't matter because we have access to all the same markets, right? Whether you're with Charles Schwab or JP Morgan or E-Trade, we're all investing in the same markets, the public markets to some extent. Now, when at a certain wealth level, you start having different opportunities where you start getting access to private investments, right? And then usually you have to be a qualified investor. So, and the mean definition of qualified investor, you have to have more than $5 million in assets. Then you start having access to more private equity deals, like investing in companies before they go on public, for example. But at this point, unless if you have $20 million, please call me. Then we'll have a conversation how we can help you. And beyond that, all companies are the same because they all have access to the same public markets, whether it's the US or international markets or emerging markets, whatever the case might be. What I would do at this point, I would pick a platform that I'm comfortable with, that they have a nice interface, and then you know what you're doing. And then I would say just be really careful. And that's a really good question because, I think about the platforms today, like Robinhood, for example. You have to be really careful as an investor because it's really easy to lose a lot of money because they don't clearly define the risk that you're taking, especially with derivatives. If you start trading options, you can lose a lot of money if you don't know what you're doing, and then things can get out of control really quickly. So yeah, just pick something that you like the platform, you like the interface, and then just make sure you know what you're doing on that platform. Also, I would highly recommend that you pick one that has a lot of educational stuff in it, like to learn how to trade and then how to build portfolios. And then look, if you're interested in doing derivatives, let's say, they're not bad, right? They can serve their own purpose, but just make sure you're well educated before you invest in anything. That would be my advice.
Somebody asked, when you say real estate is a good investment option, did you mean buying and selling properties or buying and leasing out, or which of these is?
Yeah, it's really hard to answer this question because it really depends on your preference and it depends on the market and the economic environment and the backdrop, right? We think like, just to give you an example now, we're seeing inflation numbers starting to rise. If you buy a real estate property and then you lock in an interest rate for 10 years, let's say, and then you rent this property out, and then with higher inflation numbers, you can start increasing the rent on the tenants, then that might be a good investment, right? I'm not saying it's a good investment because we don't know how inflation numbers are gonna play out in the next few years. But also if interest rates move higher, right? Like usually there's a positive correlation between inflation and interest rates. If inflation numbers go higher, then interest rates will be higher as well to slow down the economy. If you want to be flipping properties, buying and selling, that can also be a good one. There is a risk involved in both of them, right? If you're buying and selling, you might be stuck with the property, longer than what you want. And then if you don't have a nice cushion of savings where you can be, let's say you can't sell your property for 1 year, are you able to finance continue the payments, right? So these are things you want to think about. Also, if you want to buy a property and then rent it out, would you be okay if you don't have a tenant for a year? Can you really finance this property? But also one thing to consider, if you don't have the large balance sheet at this point and then you want to invest in real estate, there is something called real estate investment trusts, and these are publicly traded, and we call them REITs, REIT. And then you can invest in a company that manages real estate, and they have residential, they have commercial, they have office spaces. It's really what you want to invest in, and then they pay a nice dividend as well. So this is one thing that you guys can look at. If let's say you only have $10,000 and you can't afford buying a house today, but you want to invest in real estate, then REITs, real estate investment trust would be a good alternative at this point.
Question in the chat. So for someone like a graduate student right now, invest right at the beginning. And someone that just wants to kind of get their feet wet and get started and start learning. Are there any platforms that you would suggest? Like we know maybe like Acorns is out there or anything else like that?
Yes. So, as a graduate student, you have two types of capital. You have human capital and you have financial capital. That's any individual, right? The human capital now is what we have, that as a graduate student, you have high human capital because you're invested in yourself. And now, if you think of your earnings potential over the years, is really a lot of money, right? But just it's all about that you have future outflows that you have not captured on yet. And then once you start aging and then you start building your wealth, then your human capital starts decreasing over time. And then your financial capital starts growing. And that's what we normally see with anyone. So to get your feet wet, I'm not so familiar with the Acorn platform and stuff. Is that like an investment platform?
It's like you set it up and whenever you like use your credit card, let's say you spend $1.
Yeah. Okay. Yeah, so honestly, I wouldn't count too much on this because you're never gonna have a nice savings account just by doing $1 every transaction. And they get you on that, right? Because you'd be spending a lot of money if you have a lot of savings, then you're gonna end up in, negative return. I would go back to the, income, expensing, and budgeting. I would set aside, maybe you want to save $10,000 a year or 20 or 30 or 5, depending on your circumstance. That's what I would stick on. And then I would divide that by 12 and then see how much I have to spend or save on monthly basis. That's how I would do it. And then there's also the, like if you want to keep Acorn and saving $1 at a time, sure, but you're not going to get there for a while. Also, if you want to ask anything related to stock market, bond market, anything economics, I'm happy to answer the questions too. Go ahead. Yeah, cryptocurrency is an interesting one, right? Usually banks were not really, didn't have high conviction on cryptocurrency initially, especially the CEO of our bank, Jamie Dimon. We then started investing in cryptocurrency. And the reason we started doing that, we said, look, we don't believe in it. We don't think that it's going to make us a lot of money. But if we can make money off of it, we're not going to leave any opportunities on the table. We want to make money in every opportunity we have. So we've done a lot of research on cryptocurrency. We don't really think cryptocurrencies are going to be ever currencies, right? There may be a place store of value more than a currency itself, but they're very, very volatile. And so if you want to, so what we advise our clients today is like, look, if you really want to invest in cryptocurrency, go ahead and put 1 to 2% of your net worth, right? So this way, if it skyrockets, great, because you're going to have some exposure to it and you're going to make some money. But if tanks at the same time, right, it didn't really impact your wealth. Now, if you want to take more risk, sure, yeah, instead of putting 2%, go ahead and put 5%, put 10%, but I would not recommend anything, high allocation of your net worth, because at that point, none of us understand it fully. We understand how it works today, but nobody really understands the regulatory platform. If, let's say, the feds tomorrow say that nobody can transact on cryptocurrencies, then that can really trigger the value to go down a lot, and if you can cash out on it. So at this point, there's a lot of risk entailed with cryptocurrencies. It's a great opportunity at the same time. It might be in a bubble, nobody knows, but also if you can participate in it while it's going up, but you understand the risk that you're taking and then you cash out before the bubble bursts, that's also another investment opportunity, but it's very risky. So I would really understand the risks entailed with it. Yep. Yes. Yeah. So the question here is, like I mentioned, that there are some stocks that they pay high dividend yield, let's say like 6% or 7%, whatever the case might be. And we're getting asked for stock recommendations here. I'm not going to be able to give you any stock recommendations, but I tell you that all the information is publicly available. So see what you're interested in investing, and then you can go research it on your own. But there's a lot out there. There's a couple of sectors that I really like today. I like healthcare sector. So if you want to look companies within healthcare, And then also I like information technology sector, also financials, because if we anticipate that interest rates are going to start moving higher, then banks will start having a higher net profit margin, and that will be reflected in our earnings. So, and that will be reflected in the stock price relatively. So these are the sectors that I like. But I would hate to give you a stock recommendation and then that stock would tank and then you think I don't know what I'm doing. So that's why I'm not going to give it to you.
So we have another question in the chat. 54 years old and to start investing. How do I know what kind of companies to look for and good return on any investment?
Yeah, so thank you for the question. I really think, look, with companies, there's a lot of good companies out there, and then you have to. The key is to have a diversified portfolio, because if you're just gonna invest in one or two or three companies, let's say, you're taking idiosyncratic risk, is what we call it in the world of finance. That means that you're taking company-specific risk. You know, even great companies, like to give you an example, Boeing was a great company, right? Until one of the airplanes crashed, and then another one crashed, and then, you know, they stopped buying their airplanes, and then COVID started. So even great companies, they always have a risk that we don't anticipate. So having a diversified portfolio of really stocks that you believe in, I think would be the key to that. And then what do I mean by that? Maybe 20 to 30 stocks is more than enough, right? And then try to diversify your portfolio between different sectors, because some sectors are more cyclical to economic environments, where other sectors are more defensive. So try to mix it between the two. And then also you can think about, because you are 54 years old, what is the purpose of your investing, right? Is that for your money to grow, or do you just want like kind of like income on the money? If you want the growth aspect, then you want to invest in growth companies, and that would be more like technology companies, right? Information technology and so forth. But if you just want the income, then you're better off going investing in utilities, for example, because they pay a high dividend versus growth companies, which usually don't have any dividend. Yeah, I hope this answered the question. Yep, you're welcome. Any more questions? Yep.
Treadmill. How do you think that consumers should think about those options?
Yeah, so we have a question in the room that there's a company called Affirm, and I think Amazon or Apple was looking at buying this Affirm company actually as a strategic acquisition. And then the question is like, how should we look at these? They're charging you an interest rate, right? And maybe they're giving you 12 months without interest rate. I'm of the opinion, if you can't afford it today, don't buy it, right? Everything can wait. If it's urgent, then okay, buy it and then see how you can finance it in the most reasonable interest rate that you can attain. But you can always save, right? That's why you create a budget, you save, you wait until you have that money, and then you buy it. And then it will mean a lot more to you, right? Because when you buy stuff and then you pay for it after you get it, it doesn't feel as good, right? But when you save for it and then you buy it, you just like appreciate that item so much more. That's the way I look at it. And then everybody is entitled to their opinions, right? That's how I buy my cars, for example. I save and I don't even finance my vehicles. I just save for it, and when I'm ready to buy it, I'll buy it. Because even if they're charging me 3% interest rate, right? Like, okay, yeah, I can afford that, and maybe I can invest these returns. Instead of paying 4% for a car loan, I can invest it and get 8% in the market. But it's just something I want to balance between investments and the risk that I'm taking, right? And the debt. So it's kind of balanced. Like, what are you comfortable with? Like, how much risk do you want to take? If you're very conservative, then you're going to pay off everything without having any interest rate, because you're not going to invest in the market. But yeah, anyway, I can keep going for days. So
Habits of are able to acquire.
yeah. So the question here is like, based on my work experience, do we see wealthy clients putting budgets for themselves? And then as students, then how do we put budgets for ourselves that can kind of resemble what wealthy individuals do? It doesn't really matter the level of wealth that you're at. A budget is a budget. Now, what we call it is like a goal-based plan, right? And then kind of is a budget for their lifetime, right? Like, because when you have wealth that extends beyond your lifetime, that where your kids are going to benefit from it, and your grandkids, or maybe some charities, right? Then you start thinking of all these things, and then how do you allocate these assets to different buckets to really achieve the client intent? But in simple form, it really is the same, right? Like a budget is a budget, or a plan is a plan. Like how much do you want to have saved in 10 years? What is important to you, right? What do you want to be able to purchase in 5 years? And then how do you get to this goal? And then nobody's going to put that goal for you, right? Like you have to work on it, and then you have to self-discipline yourself to get to that goal. It's not an easy task, but it does pay off, and it keeps you on the right track where you're more financially comfortable. You're welcome.
Chat. So after we created our budget, how often should we revise it?
Yeah, so there are, when I think of this question, I have two answers to that. I would say at least, revisit it annually, just to make sure. And then I would visit it honestly every 6 months, just to make sure that I'm on the same budget, right? And then if you use a platform like Mint, I look at this every month just to see what am I overspending with, or where can I spend more money, right? Like today, I'm gonna go eat sushi because I have, a few more sushi meals that I can utilize this month. But when you think about revising it, also there are things that changes in your life, right? So let's say you get a new job. Let's say you were making $100,000 and now you get a new job that you're making $150,000. This is a life-changing event, and then you might want to reconsider your budget now. Like that doesn't mean that you should go spend more money, but maybe now you can go and then save even more. But of course, you can spend a little bit more as well. I hope this answered the question. But it's really like, it doesn't hurt to revisit it as as often as you like. But I wouldn't make any big changes. I would commit to it for at least 1 year, and then when life changes happen. So one-time expenses, like I mentioned, you can save up to it, and then you can buy it. Then you can, let's say it's I don't know how large the expense is. Let's say it's purchasing a home, and then you want to put a $50,000 down payment. Then that might take you a couple of years, right? And then you have to commit. It's like, okay, how much do I need to save every month to get to my down payment in 2 years? That's one thing you can do. Also, you can finance it, right? Like with home purchasing, you can think about like how much of a down payment do I want to put, and then how much in financing do I want to get. And this is, again, it depends on your risk tolerance and what you're thinking. Any other questions here? Yes. Yep.
How was that?
Absolutely. So the question we have in the room here is about credit cards, and we all in the mail get like hundreds of applications for credit cards, and I would say look at these companies and go buy their stock maybe if they're trying to sell you a credit card. How many credit cards should you have as a student, and is it better to spend on a credit card versus spending cash or checking account or savings account? Actually, I really like credit cards myself a lot because you get perks with credit cards. It's a balance of how many credit cards you want to have. When your credit score is being built, they look at different aspects, and I'm not the expert on this, but they look at your credit history, and they also look at how much you are leveraging your credit line. So let's say you have a $10,000 facility, right, or limit on your credit card, and you're using $9,000 on that 10,000 every month, then credit card companies or banks will not like that, because it will show that you are very needy of this credit, right? Like that's credit we're giving you, but you're utilizing all of it. So this is not for your credit score. If you keep applying for so many different credit cards, that's going to give the same indication. They say, okay, this person is desperate for more credit. Like they don't have enough money to spend on their own. So they're desperate for credit, and this is not a good thing. So we're going to kind of lower your score, your credit score. There is no perfect number of how many credit cards to have, but I would say 3 credit cards is a good number, right? Or two credit cards, right? Like it depends on how much money you spend again. If you just have one and you're just starting to build your credit, and that's also okay, right? When I'm thinking about credit cards, especially if you're starting to build your credit, get a credit card that has no annual fee. Because if you're going to get a credit card that has an annual fee and then you don't like it in 5 years and you don't want to pay the fee anymore and you want to close it, that's going to impact your credit history. Your credit score will go down. So get something with no credit fee, annual fee, and then you can keep it forever, even if you're not using it. And if you don't use it, they're going to close it for you. So just put like a $2 transaction on it on a yearly basis or whatever, just to keep that card open to maintain that history of your credit score. At the same time, like, because you're spending money anyway, so you can spend it on your credit card to, but again, think of how much you're utilizing from your credit card. Like 25% is a good number, 30% is a good number. When you start going above 50% of credit card utilization, that means, you're using your credit card too much, and it might impact your score in a negative way. And then, but then if you have a $10,000 limit facility, and then you're only using 500, and they're gonna try, oh, we're gonna increase your credit limit, to 20,000 or 15,000. This is the bank will reach out to you. But yeah, I wouldn't apply for every credit card application I'm getting. If you like the credit card, if you like the perks that they're giving you, in return to your spending, I would get that credit card, and then I wouldn't go beyond 3 credit cards, honestly, because it's gonna impact how many times you're applying for a credit card, and it's gonna impact you when you want to apply for a car loan or you want to apply to purchase a home. One thing I want to mention about credit cards. The interest rate on credit cards is really, really, really high, and then it compounds really fast. So be careful with your credit card purchases. Just make sure whatever you're using that credit card, that you're gonna close the balance automatically at the end of the month, the full balance, not just like the minimum payment, because the residual, you're gonna be charged interest rate on it, which is really high. So make sure that whatever you're spending on a credit card, make sure you can afford it at the end of the month from your checking or savings account.
Questions that like
Also talking about just like banks think, right? Like if they charge you interest rate on the credit card residual balance that you have, that's going to compound over time. That's how you should think about your investments, right? Because if you start investing today at a younger age and then wait for it, it's going to compound over the next 10, 20, 30 years, right? Even the person who just messaged us earlier, 54 years old, honestly, this is relatively young, right? Like if we now, the average age is like 85, 90 years old, that you still have, like good 30 plus years of investment horizon. I don't recommend that you take, excess risk with it, but you still have a good time horizon for investments.
question in the chat. I have a question regarding 2 credit cards from the same accidentally opened. Does this also affect my credit score? Should I close it or close one?
I would call the credit department of your bank and then see how would that impact you. They would know more than I would. It would depend, just to give you an answer now, it would depend if that was like another user, or maybe it's just like, if it seems like 2 credit cards under the same individual. I don't know why this would happen, honestly, but I would definitely call them and then make sure it wouldn't impact your credit score negatively. And then if you have to close one, make sure you keep the one that you've had for a longer time open and close the more recent one, so it doesn't impact your credit history. But also, if it depends if you have balances on both of them, right? The good thing about having two, if it doesn't have an annual fee, what it's actually doing is increasing your credit limit, right? Because the way they look at it is not just credit card per credit card, but they look at it like your total credit limit. And now if you have, let's to give you an example, if you have $10,000 credit card and you have two of them, two $10,000 credit cards, and you're putting $5,000 on one of them, now you're only using 25% of the whole amount. Now, if you close one, now you're at 50%. So just talk to your credit department and see how would that impact you. So that's, it can be a lot of moving variables on the situation.
Looks like we have another question. When paying the balance on a credit card, is it more important for your credit score to pay it off before the payment is due or when?
It doesn't really matter, in my opinion. I've done both. It's like it doesn't really matter, and we've seen clients do both. Just make sure you pay it. That's when it doesn't matter. Yes. Again, I think usually 740 and above, you get the best credit rates. And then as you start moving lower and lower, you're just gonna, some people will still be willing to lend you money, just will be at a higher interest rate. Interest rate is a measure of risk, by the way. So even returns, right? When you're thinking of anything returns or interest rate, something that, let's say I want to buy a bond and this bond is paying me 10% interest rate. The reason this bond is paying me interest rate of 10% versus 2% another bond, because this bond has a lot more risk entailed to it, versus a 2% bond, which has a much higher credit quality, right? So lower risk. So that's the way you want to look at it. And that's the way banks look at you, right? When you have a lower credit score, they might be willing to lend to you, but at a higher interest rate because you have higher risk to the bank. Well, 3 minutes left. If anyone has any last questions, I'm happy to take it. Thank you so much, and it was really a pleasure meeting you all virtually and in person. If you have any questions, please, you can find me on LinkedIn. Just message me, and I'll be happy to help out. Thank you.